Hey guys, it is Mark Coe for 21st of May. I wanted to show you guys, obviously, looking at markets today, what we were able to find here for us and for our traders, and did want to let you know that this is the last week we're going to be offering this this $500 pricing for the 12-month subscription. So I would certainly grab a hold of it if it's something you're interested in. The regular monthly subscription is $149, so it's a steep discount if you pay for the year up front. But let me get to euro dollar. All right, so euro dollar, the reason been looking at this 17.20 to 35 area on the bottom had nothing to do with the 5-minute, 15-minute, 4-hour chart. It simply had to do with longer term analysis, something we've been focused on for quite some time. And this is what I'm going to show you. This was quite interesting. The lows contained here in the December sell-off, 17.18. Again, the way I draw levels, the way I mark levels, they are simply areas that the market wouldn't rotate lower or higher from, and that's what it is. And so you are able to use it going forward. This was 17.18 on the lows. The lows overnight traded down to 17.17. So you say to yourself, wow, that's a thing of beauty. Great. That is your highlight. It's about 30 ticks. That's what you want to be focused on. It's something I've talked about for weeks. I talked about it when it looked like this, talked about it when it looked like this, talked about it, for the last several weeks. In real time, as that thing came lower and lower, what were we able to really take out of it? Well, depending on what your trading schedule allowed, you knew that level was there. All the traders knew it was there. Early Europe, as it traded there, you had to be sitting at your screens if you were a short-term trader. But if you're there, that's almost a 70-tick move. U.S. session, not quite as good because you needed a pullback. This was the level we were looking at pullback-wise. It traded down to 40s, the lower 40s. That was your only real shot at an entry here, but it was maintained on a long bias the whole afternoon. So there was still about $500 there per standard lot, right? So I'm looking at it like 50 ticks. That was from U.S. session. Let's take a look at crude oil. Crude oil was not quite as kind today if you were following the model. The model stopped out, took a loss, and then the short-term bias was not correct. The only thing that really got it correct in crude was the count, and the count, trumped everything here on the short term. The count pretty much had it right. It was a trending day. So we were looking at longer term bias. The longer term bias was still at the edge. It wasn't overly painful, but it wasn't correct, bottom line. And that's going to happen. But the key always becomes when you take a loss, that those losses are contained, and when you take winners, that they are drawn out. So this was, again, that top edge that it got through. That's crude oil. So I just wanted to show you. Don't think that I'm only showing you good. I'm showing you what's happening. Crude oil was just wrong-footed today because it got through the top edge. Let's take a look at gold. Now, gold was an interesting market because it really hasn't been long biased for the last 20 bucks. It has not been, but there was an interesting level here in gold that's been on our radar. It's been a U.S. Open level for the last 3 days. It's been this 1280 level. So again, why is that interesting? Well, it's only interesting if you're trading short-term gold because it was a short-term trade, but you were highlighted to that area being there. That's the key component of what we're doing and what we're offering and why it's so valuable. But you still have to trade them. And so what you're looking for is activity down into your level, right? So this is it. This is an early Europe. So again, that's 1280s to 1290s. You're talking a better than a $10 rotation. Pretty interesting stuff. And ultimately, not a ton of opportunities on a Monday, but some opportunities, and ultimately, it's still positioned. The biases are still looking long euros, long pounds. The model is still positioned long euro yen, long sterling yen, and we'll see what Tuesday has in store. I think we're going to do some open house sessions, so make sure and check it out. If we do, we'll certainly send a video and an email, but wish you guys the best. And for 21st of May, it's Mark Coe.